Mr. Srinivasan. He is the Managing Director of Exponentia Capital. Mr. Srinivasan is a veteran of the Indian PE industry with a direct investing experience of 16 years, spanning over 6 funds. PRS is credited with several marquee transactions in India, including investments in GMR India, Ind-Bharat Power, KS Oils, Suzlon, Sharekhan, and Yes Bank. Previously, as MD and India Region Head of City Venture Capital International, PRS led or participated in about 20 transactions, investments that returned over $1 billion in gains for investors. Prior to joining CVCI, PRS was a founder member of HSBC Private Equity India team and a member of the highly successful IT sector team at ICICI Ventures. PRS is a graduate of Mechanical Engineering of the College of Engineering of Guindy, Madras, 1986, and a postgraduate management from IIM Bangalore. I've requested PRS to speak about the PE industry in 2010. Please.
I hope you noticed I'm also engineer.
Another engineer.
An engineer who's forgotten engineering and has been in finance for the last 18 years. I've been in private equity for about 18 years, actually, starting in 1992 in ICICI Ventures. Can you hear me? Yeah. Okay. I was speaking to a very smart fund manager who was sitting in the audience, I'll not name, and I asked him about private equity in 2010, and he said that 2010 was a year of exits for him and not a year of investment. It does turn out that the numbers sort of agree with him in the sense that $5 billion of cash was returned by private equity investors in 2010. What is remarkable is that investing is also picked up, and it was $7.5 billion, which is not the same as the record which was in 2007. Okay, but what it sort of shows is that Indian private equity investors still continue to be pro-cyclical rather than counter-cyclical. The index goes up, the investment activity goes up, and the index goes down, the investment activity goes down. As a fund manager who is in the process of setting up a fund and talking to LPs about raising capital, I think this is the first thing which the LPs sort of want to rub their nose in and say that you guys are supposed to see value when the market is not seeing value and you are not seeing it. Okay, and I think this is something which I definitely think that the veterans are conscious of, and if you look at the deal activity, I would think that some of the older private equity funds have not invested as much in 2010 as some of the newer private equity funds. The other statistic which strikes me significantly about activity in 2010 is that the median deal size in India is about $10 million. The average deal size was $26 million, but the median is 10, so which means more than 50% of the fund deals are less than $10 million. Okay, so which means we are in that area where you are talking about, Mr. Dham, that a lot of guys are in the smaller deals rather than in the bigger deals. Okay. The median deal size was $6 million in 2009, and it has increased to 10. The average deal size was $16 million in 2009 and has increased to 26. Okay. In 2008 and 9, about $2 billion of cash was returned, which is not surprising. The market was not conducive to selling. Okay, 2010 was a good time to sell, and people have sold. I did some amount of digging with Arun and tried to find out how much capital was totally returned by the industry over the last 10 years. Unfortunately, the statistics is not available. They are able to tell that the last, from 1988, I think you have statistics, and about $48 billion has been invested, but we really don't know how much was actually returned, in the last 10 years. But from an overall industry point of view, I think, it'll be nicer if people shared exits as much as they talk about their investments, because I think LPs from a overall perspective, assess the health of the industry based on what they know, and not knowing how much exits are there is not, definitely not helping me when I'm going fundraising. The other thing about 2010, and actually over the last 3-4 years, what we have noticed is that there are controlled transactions happening in India, but these are what we would call growth buyouts. Leverage buyouts and billion-dollar deals are far, far away from India. We are still a small deal market, and for an economy of what we are, I think that makes a lot of sense. We are not an economy which needs corporate restructuring, which is what the LBO market's function really is. We are a market which needs to build new businesses and infrastructure and other things. The other major trend in 2010 is that a lot of new fund managers have announced plans to raise funds. I think Paresh mentioned that the amount of funds raised was probably a significant low compared to 2007 or 2006. Okay, but a lot of managers are out on the gate trying to raise funds. And what is significant is that this is a new breed of people. I mean, I really wished that I was the only guy who thought of getting out of private, a job and trying to set up funds. But I think this idea occurred to a lot of my colleagues. So quite a few of them are there in the market trying to raise funds. And I'm sure 2011 will be a good year where funds will be raised. I think with that, I will conclude my remarks and I will leave it to Paresh. Thank you.